Hello folks, welcome to Looking at the Markets with David Modell. Going to talk about fractals today. Some people have thought that fractals are complicated, but really they're not. They're actually pretty simple, at least in their basic form. You can get more complicated if you want to, but I'm going to give you the basic format of fractals. And please be aware that fractals do not work 100% of the time. They're not perfect. I don't know of any perfect indicator, so please be aware of that, okay? And also make your own decisions, do your own due diligence. You are in charge of your capital more than anybody else. All right, fractals. Fractals are intended to identify possible reversal points in the market. So they're a reversal indicator. Again, not perfect, but that's how they're intended. They are typically seen as 5 candlestick patterns, with the middle candlestick being the reversal candle. Now, I've seen more than 5 some people use for fractals, but the basic pattern is 5 candlesticks, 5 consecutive candlesticks, and the middle one of the 5, that's the reversal candle. That's where it changes direction. Otherwise, it's not a fractal. And there are 2 types. You have your bullish fractal and your bearish fractal, also known as your down fractal and up fractal. Now be aware, the bullish one is the down fractal. I know that sounds wrong, but that's how it is. This is actually the bullish one right here, the down fractal. It's bullish because it's going down, then reverses upwards. So that's supposed to be bullish. And then the bearish fractal is the up one. That's the up fractal because it's going up, but then it reverses course and goes down. And so that's bearish. So let's look at the bullish fractal here. That's 2 lower lows. Okay, so we're looking at the bottoms, including the wicks, by the way, of the candles. All right, so you have a lower low and then another lower low. So 2 lower lows followed by 2 higher lows. And here's a higher low and then another higher low. All right, so lower low, lower low, higher low, higher low. So it looks like a V, basically. And that's, again, including the wick or the shadow, if there is one. If there isn't any wick or shadow, you're looking at the bottom of the body here, if there's no lower wick. All right? So the next move could be higher. That's the expectation. Not necessarily, but that's what you're hoping for, okay, with a bullish or down fractal. All right? And so then the opposite is and so you would take by the way, you would take a long position at the close of this candlestick if you wanted to play this as a bullish fractal. Okay, you could take a long position when this closes. So if this were green or white, it would close right here, and you could take a long position there if you wanted to. Then a bearish fractal, or up fractal as it's called on this chart, would be 2 higher highs followed by 2 lower highs. So higher high, higher high, lower high, lower high. Okay? And that middle candlestick, that's the reversal candlestick. And the expectation is that the next move could be lower, and so you could take a short position if you wanted to. Now be careful shorting. All right? Short selling is dangerous and risky, especially if you don't know what you're doing. So if you just wanted to go long only, that's okay. Be aware of the risks. So if you wanted to go short, you could do it after or at the close of this 5th candlestick here, which would be at the bottom of this one, since it's red or black right there. Okay, you could take a short position if you wanted to. All right. So yeah, 2 higher highs and then 2 lower highs. All right. And that is the bearish fractal or up fractal with the expectation of bearish price action afterwards. All right. Now, some people use the bottom of a bullish fractal, including the wicks, including the shadows, so that would be right here, or the top of a bearish fractal, like right here, as a stop loss. Okay, so for example, with the bullish fractal, remember we talked about how you might take a long position here at the close of that 5th candlestick here. Well, so you might go long here, and you might put your stop loss at the bottom of that middle wick here, the wick of the middle candlestick here, which is the lowest point of the 5 candlesticks. You might put your stop loss here. And with this one, if you're going to go short at the bottom of that 5th candle, right here, where it closed, then, and take a short position there, you might put a stop loss at the top of the formation, including the wicks. So at the top of the middle candlestick, right here, that might be your stop loss there. All right. So let's look at another example. This is kind of a more textbook example. This is more of what a real life example might look like. It's not so perfect. All right. This is the more perfect textbook illustration. All right. And so again, this is the bullish one. And so you might take a long position at the close of the 5th candlestick, which is right here, and you might put your stop loss right here at the bottom of the, including the wicks of the middle candle. And for the bearish one, you might take a short position at the bottom of the 5th candlestick, if it's you know, assuming that it's a red candle, and then you might put your stop loss at the top of this wick here, at the top of the middle candle. All right, so it's not so complicated, really. And here's more of a real-life type of example. All right, can you see the bearish fractal pattern here? 5 candlesticks, and you could take a short entry. Now, if this were a green candle, let's say, you would not take a short position at the bottom, because the idea is to take your position at the close of the 5th candlestick. So if this were green, then, or in this case blue, if it were an up candle, in other words, you could take a short position at the top of the body here, where it closed, in the 5th candle of the pattern, and then put your stop loss at the top of this 3rd wick, upper wick here. Okay? And if there was no upper wick, then just the top of the body. But there is a wick, upper wick, so you could put your stop loss here for your short position. All right, so that's really not that complicated, is it? It's actually usable. Again, I just went over the basics. There are more complex patterns. I've seen more than 5. Some people use it, more than 5 candles, and I've seen other applications of them. But this was your basic primer on fractals. Hope you enjoyed it. Hope you liked it. If you want some coaching for your trading or investing, you can email me at davidmodell@gmail.com. I do offer coaching. And hey, if you like this video, please give it a thumbs up on YouTube, and please subscribe to my channel if you have not done that already, and hit that notification bell on YouTube so you can get notified whenever I put out videos like this one. I want to thank you for watching and listening. Thanks a lot. I'll talk to you again soon.